This graph shows the premium I've collected for selling Tesla put options. The total premium I've collected is $61,528. In this video, I'm going to share with you the advantages and disadvantages of this strategy. So let's get started. There are 3 disadvantages and 3 advantages that I would like to share with you in this video. Let's start with the disadvantages. Number 1. Stock price drops below strike price and takes a long time to or never recovers. As the put option seller, I am providing the put buyer the right to sell the stock at an agreed price, known as the strike price, by a specific date to me. If the stock price drops below the strike price before the option expires and the buyer exercises the rights, I will have to buy the stocks at the strike price. If the stock price continues to stay below the strike price, I will be incurring paper loss and my capital will be locked, as the current stock price is lower than the price I had paid the stocks for. This will result in lost opportunity costs for this capital, which might be better utilized if invested in other instruments or companies. It is worthy to mention here to sell put options only on companies with strong fundamentals that you are willing to hold for the long term. Number 2. Capital gain loss. Selling a put brings in premium which is kept as income. This contrasts with a limit price buy order which earns nothing if the order is not executed. However, the profit potential for selling a put is limited. If the stock price rises sharply, then the put profits only to the extent of the premium received. When the stock price is on its bullish trend, we will be better off buying and holding the stock than selling put options on it. Number 3. Capital intensive. The strategy I am using is to use cash secured put. That means for every put option I've sold, I will set aside the corresponding amount of cash to purchase the shares in case I am striked. For example, to sell one Tesla option at $650 strike price, I will need to set aside $65,000, as each option contract represents 100 shares. If the share price increases at a rate faster than the premium I can collect, I will need more cash to secure any new put position. Of course, it is possible to look for companies you are willing to hold with lower share price to reduce the amount of cash needed to secure the put position. Stay tuned to the end of the video as I will be showing you my exact trades to achieve the premium I've collected thus far. Let's move on to the advantages of selling put options. Number 1. Good source of alternative income. When the put option is sold, the premium will be credited to the options account and the fund will be available regardless of whether the option is striked. If I am not striked and the option expires, my capital will be refreshed and I can sell another round of put options. If I am striked, I can choose to sell covered calls on the shares I am holding and continue to collect more premium. Strategy known as the wheel. Number 2. Lowers my stock entry price. If I'm striked for my put options at $650 and the premium I have collected is $40, my stock entry will be $610, even though I am striked at $650. This is so because the $40 premium I've earned lowers my stock entry price. If the strike price and corresponding premium are chosen carefully, it is possible to buy shares with price lower than the current trading price. Number 3. Relatively simple strategy that can be used regardless of market condition. The initial learning curve for options could be steep, but once the basics are understood, the strategy can be easily implemented and applied repetitively. And this strategy can be used regardless whether the stock price is going up, sideways or down. For instance, if the stock price drops, we can sell options with lower strike price and still get to earn the premium. Lastly, here is the summary table for my trades. Leave me a comment below what are your thoughts and feel free to raise any queries. Please like and subscribe so you won't miss out on my next video. Thank you and goodbye.